This is The Point, news from Noise, daily market call presented by Kattan Ferretti Financial. I'm your CEO, Brad Roth, and I look forward to having a daily discussion with you over the topics that we present in this note every single morning. So without further ado, The Point. Good morning, everybody. Welcome to The Point. This is Brad Roth. It is July 24th and a kind of foggy, cloudy Monday after a beautiful weekend here in Pittsburgh. Cameron, you almost had it.
Oh, I know. I thought we were going to take it home, but the member guest that drove ended up coming in third. You guys were tied for fourth, so good weekend for us.
Good weekend for the Roth boys. Took home a little bit of money, but I'm sure there's more important news in the world. So why don't you? Why don't you hit us off with it?
U.S. futures are slightly lower this morning after seeing small losses just before the weekend, as today kicks off a week filled with data and reports. Crude oil gained 1% after Saudi Arabia said it would make deep cuts to its crude exports in August. The Joint Ministerial Monitoring Committee of OPEC and non-OPEC nations meet in Russia today to discuss the progress of production cuts. Speculator and hedge fund net short positioning on the dollar have risen to the highest number of contracts since 2013, according to the latest CFTC report. It's at a 5-week low against the yen as political concerns continue to weigh on the currency. The U.S. Central Bank is expected to make no change to policy on Wednesday as investors search for clues on the plan to reduce their massive portfolio. Also this week will be the PMI report at 9:45 this morning and an update on GDP at 8:30 on Friday. Earnings season heats up this week with hundreds of reports highlighted by Amazon, Facebook, and Google's Alphabet, just to name a few, as they're expected to be the main stock movers along with government data this week. The IMF sees the U.S. fading as a global growth engine to sustain the worldwide recovery along with the UK, as they expect China, Japan, Canada, and the Eurozone to play a larger role in global markets due to less expansionary fiscal policy in the U.S. The Stoxx Europe 600 index fell 0.4% to its lowest in more than 3 months on a closing basis, led by a 0.9% and 0.6% drop in the UK and Germany. The euro halted its advance after hitting a 2-year high after PMI fell in July to a 6-month low. A sign the region's economy is cooling, losses in Europe were extended by automakers as German authorities are studying collusion among German producers. The UK begins post-Brexit trade talks today with the US as investors and economists still await progress on the slow-moving removal of the country from the European Union. The MSCI Asia-Pacific Index edged higher to continue its recent rally that's pushed it to its highest level in more than 10 years, led by gains in Hong Kong and Shanghai, while Japan and Australia saw losses around 0.5%. Some data to follow in Asia this week includes a report from China on industrial profits from last month, along with Japanese data for June, which may show a sluggish CPI even amid a tightening labor market and increased household spending. Also, there will be rate decisions from Russia, Brazil, Colombia, Turkey, Nigeria, and Ghana. And lastly, traders are fearing a hard landing in emerging markets after a BlackRock ETF that tracks emerging market debt has seen rapid growth. It's doubled in size this year, although past tendencies have seen investors reach for the sell button all at once, causing it to tumble. So, Brad, we're finally starting to see a little bit of excitement this week. A lot of data, a lot of earnings.
Yeah, I mean, we were in that midsummer lull for a couple of weeks there. Great time to start the show, huh? Like when nothing's going on.
Absolutely.
But no, there's some things definitely to keep an eye on this week. One, obviously, the FOMC meeting. I too expect real no net change there. It's all going to come out into the wording and the verbiage. Very interesting to see the IMF sees the U.S. fading as a global growth engine. I mean, we've been stuck around 2-3% GDP, sub 2 to 3% GDP forever. So, no kidding. You got to have China, Japan, and Canada keep up. China is the one that's it's not going to hopefully it doesn't hard land, but it's got to keep the world moving and growing. PMI reports out of Europe looked awful. 6-month, 3-month lows across the board. So we're going to keep an eye on the PMI report this morning here domestically in the United States. But something very interesting I'm also keeping an eye on is we have big earnings report from Amazon, Facebook, and Google's Alphabet. if you listen to the Investment Advisors podcast this week, we hit on tech valuations. We hit on how concentrated those markets are. And just a quick tidbit, Facebook, Google, Microsoft, Amazon, and Apple make up 12.8% of the S&P 500 and are trading at 41.7 times trailing 12 months earnings. Those are very frothy. So a miss or a huge beat by these three names can have the potential to move markets. But Cameron, we had a big golf tournament this weekend, didn't we?
Yes, we did. I'm not sure if you're talking about the British Open or our event, but yeah, the British Open was something. Jordan Spieth taking it home on Sunday. I really thought he was going to blow it.
I did too, man. I was holding my breath.
4 over through 13 holes, and especially where he hit his tee shot on 13, that was insane. And then next thing you know, birdie, eagle, birdie, birdie, par. So
look like Bob and I net this weekend.
Yeah, I'll imagine if he got strokes. Other than that, Pirates dropped 2 in a row, but they're only 3 games back still, so they're going to continue their West Coast swing. And Kyrie Irving's looking to get out of Cleveland. So that's pretty much it for the sports.
All right, well, let's wrap up this Monday edition of The Point. We will see you all tomorrow.